Markets are bluffing. The Fed is bluffing. And most investors completely misreading the room. But Arthur Hayes, he doesn't play that game. Back in January, when everyone else was screaming all-time highs, Arthur was calling the top. Then, as panic swept through the markets, he nailed the bottom in the mid-70s. Arthur isn't just another crypto trader. He's the guy who invented perpetual crypto swaps. He's been right when it mattered most. And today, he's back with a new mind-blowing prediction. In this interview, he breaks down why the Fed's tightening is a total charade. Powell says he's fighting inflation, but behind the curtain, they're secretly laying the groundwork for the next round of full-blown liquidity. Arthur calls it stealth printing.
Tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter.
Because if you know what to look for, the clues are everywhere. While everyone is worrying about crypto regulation, Arthur shuts it down.
Crypto regulation doesn't matter.
Bitcoin doesn't need anyone's permission. It's moving, with or without them.
On balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it?
So while most investors are still stuck in the fear, Arthur says the bottom is in. Liquidity's coming back, and Bitcoin, well, it's already turning the corner. But how far or how high does Arthur think Bitcoin goes?
Bitcoin's going to hit.
Well, you're gonna have to watch to find out. And without further ado, guys, I bring you the man himself, Arthur Hayes. All right, Arthur, welcome to the show, man. Good to have you here. How you doing today?
Thanks for having me. I'm excellent.
Yeah, good. All right, cool. I think that, the number one question, and we're just gonna start right into it, is where do you think that we are in this current market cycle? I know that maybe you're not the biggest subscriber to the 4-year cycle, or maybe you are, I'm not sure, but I know it's mostly liquidity driven. But maybe you could explain, because I think that most people who have kind of been studying 4-year cycles are a bit thrown off by where we are right now and a bit confused.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold. Yeah, gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building, and sort of technological developments were much more rapid. These days, the amount of change that happens at Bitcoin core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. And so that's why I spend all my time looking at liquidity, and that's all I care about. And so if it's a 4-year cycle, it's a 4-year cycle. And if it's not, it's not.
Yeah, I think that we'll probably die one day. Not sure when. When you say global liquidity, are you referring mostly, are we tracking that through M2, the global M2 supply?
I think M2 is such a convoluted measure because it's defined differently in every single different country, and reported differently. And so I try to keep things as simple as possible and track the least amount of variables. And so right now, all I'm looking at is the United States, China, Japan, and Europe, and so EU. And that's all I care about. And obviously, there's a lot of other central banks and countries out there in the world, but those are the four major ones. And I track bank credit, so how much credit is being emitted by the banking system. That's somewhat difficult in a lot of jurisdictions because of how infrequent the data is published. And I also track central bank balance sheets. And usually most central banks report that on like a weekly basis. And what are they saying about what their plans are for the future and how they're going to change whether the price of money, the interest rate, or the quantity of money, quantitative easing, money printing, all those sorts of things. And so that's kind of what I look at.
And so how are those measures coming in right now from different central banks that you're tracking, the liquidity within those? Where are we right now? Have they been going up? What is it telling you?
So I think post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of it is, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent. Inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm going to do my own thing, right? I'm here to solve inflation. Shut the fuck up, Trump. I don't care about your policy goals. Then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS, QT, U.S. Treasury quantitative easing, because you're effectively buying treasuries with printed money. That's very positive for dollar liquidity. And then you have in the background,
I missed that part. So I knew that there was the reduction in the treasuries from 25 billion to 5 billion, and then I thought they were leaving the mortgage-backed securities unchanged, which is still 35 billion. And then he said that they're going to offset that. I missed that part.
So Powell said that in the future, we haven't decided when yet. He was teasing this, telling the market what they plan to do, almost like a trial balloon to see what the reaction would be. Hey guys, we might taper QT to be flat, so the Fed's balance sheet will be stagnant. But we'll, on one hand, we'll be allowing $35 billion of mortgage-backed securities to roll off our balance sheet. But instead of that $35 billion just reducing the size of our balance sheet, we're going to take that money and we're going to go in the treasury market and buy treasuries and keep the yields low to help Besant, help Trump, which is very stimulative for financial conditions globally.
Totally missed that.
He did say this is definitely going to happen. But when the Fed teases something, usually it's going to happen in the near future. They teased QT being reduced I think in the December meeting, when you looked at the minutes, there was like, hey, there was votes or governors saying, hey, we think that the pace of QT should be tapered sometime in this year. And you had the big banks arguing for it in the latest quarterly refunding announcement saying, we believe that QT should be ended, quantitative easing should begin. And now you have Powell saying, hey, we want to help the treasury market, but we're still not going to be, we still can't call it QE because that's bad publicity. It's still balance sheet constant, but it's kind of a QT twist. On one hand, we'll allow MBS to go down, but on the other hand, we'll buy some treasuries. So he said that. And then finally on this tariff piece, because everyone is just freaking out about tariffs. What's Trump going to do on tariffs? Is it going to be reciprocal tariffs or a 20% tariff on everyone? He said, we believe that the inflationary aspects of tariffs are transitory, which basically means, let's say that Trump goes full retard, 50% tariffs or some ridiculous number, and that causes domestic inflation in the US as prices rise. Powell says, no, that's not inflation. We can still continue to ease conditions because we believe that is a transitory effect. That is not a long-lasting measure of inflation, and therefore we are within our mandate to continue to ease monetary conditions. So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower.
And that also then would evolve probably into altcoin season. You think that's still?
Of course. I mean, depending on what, I think people misunderstand altcoin season. They believe that everything that is not nailed down goes up, right?
Yes.
That's not what it means. There'll be specific narratives that do very well. That doesn't necessarily mean that every piece of shit in your portfolio is going to go up in value just because Bitcoin's at 100,000 or 200,000, wherever the level.
So you run a firm called MAELSTROM, and you guys do mostly liquid, or there's some.
So we do early stage token deals. We do advisory, and then I do a lot of liquid trading.
Would you say that what percentage is liquid trading? I'm just curious on.
So the checks that we write are very small, so $50,000-$100,000 checks. So we don't really deploy that much capital in aggregate. The majority of the portfolio is basically Bitcoin and ETH. We don't really trade around it that much. We'll do some interesting OTC deals and whatnot, and we do advisory as well. So we get free tokens for coming on and talking to projects, giving them advice, kind of thing.
I guess I'm just curious if you guys are particularly interested in any narratives in the kind of altcoin space or evolving.
No, really. We don't really see anything that super exciting right now. We think that anything that's a good deal is way too expensive, because again, you have all these funds, they raise a bunch of money, they got to spend it or else they have to pay. Right. So everybody is chasing after the few deals that are okay. Everything else is dog shit. So I'd say that, the pace of our investing has slowed down. It probably will continue to slow down if we continue to get a rise in the markets, because then, funders will ask for even more absurd valuations. And, we have very strict limits on what we can pay.
What do you expect the current timeline to be like? If you think that we've, maybe hit the bottom at 76, maybe we test it, maybe we don't. Do you have an idea based on the global liquidity and the kind of things that you look at, people you listen to, your kind of insight?
April's a tough month usually because you have tax season in the US. So April 15th is tax day. When you pay taxes, you sell things. There's that. There is the sort of the debt ceiling issue. Obviously, when the treasury runs down its checking account, that's a positive for liquidity conditions. However, on the flip side, once the debt ceiling is resolved, usually they refill their coffers. So Besant has a choice. He could run down that treasury's account and then say, actually, going forward, we're no longer going to run an $850 billion balance in our checking account. We'll just run it down to zero. And if we need more money, we'll just borrow it from the Fed. They could do that. Again, it's a policy choice. It's how well do Besant and Powell get along and want to coordinate sort of the best way forward to achieve Besant's goal, which is I want a low 10-year treasury yield. If Besant wants a low 10-year treasury yield, Powell is doing his part by reducing QT, hitting at QE for treasuries.
Yep.
saying that inflationary effects of tariffs are transitory, meaning he can get to keep doing what the fuck he was doing before. And maybe Besson is going to come out in the next quarterly refunding announcement in early May and say, actually, we're going to run down the TGA to zero, and then we're going to keep it there because anytime we need extra cash, we'll issue a bill, a treasury bill, or we'll just go borrow from the Fed and then pay them back later when we issue some more bonds.
It's good that you're bringing up Besant and Powell and these guys, Trump as well. There's a lot of discussion in mainstream media about, what is this administration really paying attention to? Is it Wall Street or is it, all Main Street? And do you think that, Trump, I think famously last administration, or maybe while Biden was in office, he said if the Dow ever dropped by 2,000 points in 2 days or whatever, that president should be impeached. It seems like he's not currently caring about our risk on markets, stocks, crypto, things like that, as far as the price. Do you think that he's really just caring about Main Street, or there's some sort of hidden agenda there?
I think the agenda has been pretty consistent, and an essay that I'll publish sometime this week, or maybe early next week. I have the chart that sort of guides Trump's administration. It's essentially the capital goods balance and sort of the current account balance of the U.S. and its financial account balance, and essentially it's a mirror image. And essentially, basically, it is China, right? So in 1994, China did a massive devaluation of their currency and really went hard at, we're going to be a mercantilist power who is intent on accumulating foreign currency by exporting and keeping our currency undervalued. In 2001, U.S. President Bill Clinton allowed China to enter the World Trade Organization so they could essentially have tariff-free access essentially to the U.S. and the EU. And you sort of see this, the U.S.'s current account balance fall off a cliff. Mm-hmm. And at the same time, China's, accumulated dollars go up in value. And because they can't invest those dollars back into their own economy, otherwise they would make their currency go up in value and appreciate, they have to buy treasuries and stocks. That's the only thing they can really buy in size and liquidity. So the money comes back into the US, into the stock market, into the treasury market. And Trump and the Democrats have been very clear, China is our pseudo enemy. Therefore, we need to get these manufacturing jobs, back from China into the United States, which necessitates that there's less dollars that are going to be buying treasuries and stocks. And so they've got to find a buyer for these things. So that's where Powell comes in. He's got to print the money. That's the only way that the math works. Even if they get to a 3% deficit, which is Besson's goal, 3% deficit by the end of 2028, that still means on a net basis, the United States is not retiring any debt. So the $36 trillion in debt compounds exponentially.
Yeah.
And so the problem gets even worse unless they can grow. So if they can grow at a 5 or 6 or 7% nominal GDP rate, and then they can sort of deleverage the balance sheet. But then the question is, okay, well, if nominal GDP is 5 or 6 or 7%, what should the treasury yield be that they're borrowing at? Well, theoretically, it should be 5, 6, 7%. If the economy is growing at 5, I should get 5 as an investor. But that doesn't work. The math doesn't work. It's what they have $1 trillion yearly interest tab, and the net yield and the weighted average weighted average yield on bonds right now is 3.3%. So it goes to 5% or 6% wherever they need to print nominal GDP to hit their goals. Unaffordable. So the only people that can essentially help Trump and Besant, I think the entire political establishment in the U.S. kind of have the same goal. They might have different flavors of rhetoric around it. But at the end of the day, they want to bring manufacturing back to the U.S. from a military perspective, from a jobs perspective. And the only way you can do that is you need to find somebody who's an insensitive, inelastic buyer of treasuries. And the only people who can do it is the Fed and the U.S. banking system. It's the Fed's doing its job by tapering QT in a strong economy and starting QE on treasuries. And you have the banking system is going to be buying treasuries with infinite leverage once Powell grants them the supplemental leverage ratio. It's all going to happen because it's the only way that they can afford to hit these goals.
And stable coins are buying treasuries quite aggressively.
I mean, I'm not sure if I really buy that argument.
Yeah. I just think it's a significant amount, but it's also short term usually. On a different note, some wallet trackers recently claimed that you had bought $2 million worth of hype. Is that true?
No comment.
Okay. If it were you, I think the best person to ask, their opinion on something like hype would be you, considering that you found a BitMEX. It was a necessity at the time. We need a centralized exchange that had give us ability for perpetuals and things like that. Now times have changed. Technology has evolved. And if you could do it as well or better without the middleman involved, so be it. I know you're a big fan of GMX as well back in the day. What are your thoughts on hype?
I mean, obviously they're posting insane volume numbers, right? That's something like 10 or 20% of Binance or OKX on a given day. Mm-hmm. The question that I think investors have to ask is, and I think I know the answer, do they actually care about decentralization? Is hype actually decentralized? I don't know the answer to that. Right. I don't think investors actually give a fuck whether they are or not. They see the volume numbers. There's potential revenue that comes back to, I'm assuming, hype token holders. There was some sort of staking or revenue sharing program, however the rewards work. And so volume, I can get paid this. It's the fastest growing thing, therefore I should buy it. There's this whole layer one narrative, like app chain. They have the clients, they have the flow, so they can launch their own sort of layer one EVM compatible thing, right? So I think it's got a lot of good narrative pieces. It also is not a VC coin, right? So the early supporters of hype got hype at a good price. They're able to get wealthy alongside the project, which is not the case with the majority of new launches over the last 18 months. So you have that sort of piece to it as well. So I think, all in all, it builds a strong profile for a project. Whether or not it is what they claim it is, I have no fucking idea.
Yeah.
It doesn't really matter at the end of the day. If we're in a bull cycle, you just buy it.
What would be your targets, coming in with the current business cycle and the liquidity cycle that comes in? Bitcoin hits what at a peak? And, I don't know if Ethereum is a good one to use because Ethereum has just gone nowhere recently. But like, if you could say, okay, Bitcoin a certain price, maybe Solana a certain price, or just the whole, total three.
I think Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio. I don't think you should really trade based on a particular price target. It's more, how do you think the expectation of what fiat liquidity growth has to happen to justify this price versus the reality of what's going on and what the politicians and the central bankers are actually saying, right? Because in November of 2021, everybody thought the moon, we're just going to keep printing money and blah, blah, blah. And then, Powell said, hey, we're going to start tightening money. I think it's at the December meeting, we're going to start raising interest rates in March. And essentially around that time was the peak of the market, right? So I don't think it's a number we should have in mind. It's, do the central bankers and the politicians think that they've gone too far in this sort of fiscal expansion, money creation? And when that zeitgeist changes in sort of the TradFi markets, we have to be cognizant of that. And then regardless of where the price is, it doesn't matter what the nominal level is of the things in your portfolio, you have to get into safety because it doesn't really matter at that point.
Do you think that all nation states have already begun accumulating Bitcoin either before Trump had acknowledged the strategic Bitcoin reserve, or do you think that they have?
I think people like to talk about it. Even the U.S. Bitcoin Strategic Reserve, what is it? I have confiscated some Bitcoin from people and I'm not going to sell it. That's what it is. And it's a lot of Bitcoin, don't get me wrong, but that is what it is. It is not, I'm going to print money and buy Bitcoin, which is what everyone wants to happen. I don't think that's politically palatable in the United States. It's not politically palatable in any country, to be honest. I think a central banker, if they're going to buy an asset, they're going to buy gold because they intrinsically understand what gold is. As recent as 1971, it was the standard globally. The dollar was on a gold standard for other central banks. And so that's what they're going to buy. And they have been buying it en masse since 2008. They've accelerated since February 2022 when the US and EU stole Russia's money. And so that is what central bankers are buying. They are not buying Bitcoin. There is no fucking way that a politician is going to stand up and say, I'm going to print money and I'm going to buy Bitcoin. That is not happening. So I think people need to adjust their expectations on what these strategic reserves mean. It's kind of like when a boring company starts throwing out buzzwords of all these product lines are going to do to get their stock price to pop. Companies want to be seen to be technologically forward, to be innovating, and so they're going to say these nice things. Oh, we're going to put a Bitcoin strategic, or we're evaluating, or we're this or we're that. But are they going to go to their people and say, I'm going to print money, I'm going to increase the fiat supply so I can buy some Bitcoin, so the Bitcoin bro can go to Space Club in Miami and buy tables? Like, it's just not happening. So I think people need to get their expectations right.
So do you think most of the stuff that's happening in America when it comes down to crypto and Bitcoin adoption is a lot of noise distracting people that are constantly looking in the crypto space?
No, I think it's people in crypto don't understand how politics works. So, there's a political process and how people do things in the United States, whether you like it or you don't, and they're following in that process. There will be bills, there'll be lobbyists, there'll be consultations, there'll be working groups and this and that, and the luminaries or whoever those people are will get to meet the people in charge and talk to them about what they want, and they'll come up with this massive fucking bill. And maybe it'll be good, maybe it'll be bad, I don't know. And that'll be the state of the play, right? It's going to be some like massive step change where they're just going to make you rich just because I don't know why. No, and I think that's just people don't understand how politics works, and they have these sort of inflated expectations about what's going to happen.
But my question really was probably whatever does happen or said out of Trump's mouth or Bo Hines or David Sachs or whatever, probably those are not the factors that we should be looking at to understand the macroeconomic cycle and how. I mean,
understand the intent, but the execution is different. So the intent is we want to have a more Bitcoin or crypto positive policy. The execution, the details are obviously very important because what's in your portfolio depends on the details, not the intent. People got the intent, it went from 70 to 110,000, and they kept thinking the intent was the policy. And they were rudely awakened that the intent is not the policy. Policy is still being written. And it might not be as bullish for whatever you own in your portfolio as the intent of what someone said on the political speaking circuit was. It's not that they're lying to you. It's, I would like to do this. Okay, but the reality is they have to make concessions here and there and everywhere.
I agree with you on that. I was just asking more about, leaning back to what we talked about in the beginning, the real driver of price of Bitcoin essentially is going to be liquidity versus anything that's said in 2025 in the Oval Office.
Crypto regulation doesn't matter, in my opinion. If it mattered, then Bitcoin would be at $2 or whatever. If the Democratic people's assault on Bitcoin or in the Biden administration, if you sort of believe that rhetoric, then Bitcoin should be much lower. Is it? No, because they printed a fuck ton of money and it went higher. So regulation doesn't matter. If Bitcoin trades on TradFi regulations, I don't want to own it. I want something that's immune to regulations. That it doesn't matter what the politicians do. The Satoshi has created such a perfect game of economic incentives that we will survive regardless. Yep. If you don't believe that, then sell everything in your portfolio, because what are you doing? Just go buy a fucking stock.
Exactly. I mean, I believe that hardcore. Do you also believe the same is true eventually for some sort of altcoin projects that happen to be decentralized, that build something that disrupts some sort of massive incumbent, that people finally go, this is why Ethereum was built, or this is why smart contracts exist? Do you think that'll happen?
Yeah, for sure. It's hard, right? To create another Bitcoin analogous solution in whatever vertical is hard.
Yes.
Bitcoin wasn't an ICO funded VC pump and dump project, right? It took many years, a lot of struggle, a lot of intelligent people, a whole community, grassroots coming together to build what we have today. It took a long time. It's not I raised a pre-seed and therefore 50 million, then 500 million, then 2 billion FTV list on Binance, and then it goes to a trillion, right? That's not how this works.
Yeah. Do you have anything to say about that? To founders or VCs, yourself as someone who writes checks, these kind of, now I'm starting to come in and I'm talking to founders a lot because we run a fund as well, and it's like, what did you do so far to justify a $30 million seed round? I mean, in an equity world, like that's unheard of, and so in our space, it's become the norm to have these kind of outstanding, enormous valuations. And they're usually led by, especially the ones that led by big VCs, who just mark up rounds in between round after round. The first round's at 50 and then it goes to 100 and then 250. Do you touch these kind of projects or not really?
No, we have very strict limits on what we can pay. I'm not going to say what it is, but it's very low. Our message to founders is, number one, make your users rich with you.
Yes.
And so number two, your token price doesn't matter. None of us can sell it. You can't sell it. I can't sell it. So why are we playing this game where we need to mark this thing up at some ridiculous valuation? You create this terrible looking chart. And then the retail person who needs to get excited about your project to buy it and use your service to tell their friends about it doesn't want anything to do with it. And so then your fucking thing dies. And then none of us make any money. So I think people need to get away from this. The price means something. It means something in 10 years when you have a real product and users. But today it means nothing because none of us can sell it. So why are you doing these things that in the long term harm the adoption of your portfolio, of your project? I think some founders are getting it. Most are not. They're still in this, I need to list on XYZ Sex. I need to do what they tell me. I need to pay them all these tokens. I need to have a 1 billion FDV project. And I always ask why. What's the point? You can't make any money and I can't make any money. So why are we doing this? And we know that your thing's just going to get dumped on.
Yeah.
Or ignored, even worse. The worst is just ignored. I'm not even going to buy it. I'm not even going to think about it as a retail investor. I'm just going to trade Bitcoin and some other layer ones that are super liquid. Like why maybe some fucking fart coin or meme coin. At least I'm having fun. At least everyone's in the same space as me and not just getting dumped on.
Yeah. So you built BitMEX. Have you had any other type of thing you've built since then other than, your fund and kind of stuff like that? But anything, no? Do you plan on doing anything else like that or was that it?
No, I love investing is great.
Yeah.
I don't have to do any work. I sit here, I read hard, right? Building's hard. Yeah. I read papers, express myself online and have a bit of fun trading. This is great. I am perfectly happy and moisturized in my lane. I do not need to try to build another project or company.
Yeah, it is a lot of hard work and you did well. No, it's
thank you.
Yeah. Did very well. But I don't blame you, man. It's, we're still building and it's been a mission and yeah, like you said, I still think that it's really hard for people to understand what a decentralized altcoin project looks like, something that truly disrupts Uber or something like that, or Airbnb or whatever. I think we're close. I think that the infrastructure is close. I think that technology, is abstracting away the difficult part from the end user, things like that. I think we're getting there, but just not quite there yet. And yeah, I guess that's going to wrap it up. Arthur, thanks for coming on, man. I really appreciate it.
It's been great.
Yeah. I'll see you in Singapore. Or sorry, Dubai.
Yeah, or in Dubai.
Yeah. Okay, thanks, man. Bye-bye.